All right, let's go through a bank reconciliation problem. Now, these problems will be structured a little differently depending on the problem, but a lot of the problems you'll see, or at least some of them, will show you an actual replica of what a bank statement might look like. This is the example here from the journal. You notice here we've got a bank statement from Statewide Savings Bank with the date of October 31st. A lot of bank statements cut off at the end of the month, which is good. Bank statements will typically have two sections to it, including the balance. It'll have a section showing all the items that came out of your account and all the items came into your account. If you see the terms debits and credits on the actual physical bank statement, don't get too caught up in that. Banks actually use the term debit and credit opposite of what we're used to, so don't get all worked up about that. Just focus on, when you're looking at a bank statement, what items came into the account, what items came out. All right. The other thing you're going to need for bank reconciliation is you're going to need an accounting of what you have on your books. So again, remember the business is keeping track of this as they go throughout the month, so they're going to have records of this, all the items that came out of their account or what they think came out of their account, all the items that they deposited to the account. You're also going to see usually some descriptive data helping you out with some additional information. The structure of a bank reconciliation looks a little bit like this. You're going to have two major sections. You're going to have a section per the bank, and you're going to have a section per the books. And you'll notice it has an opening balance and then an add and a less section. You won't always see add and a less, but it's helpful if you have that, I think. And then you're going to have an adjusted balance at the end. That's how we're going to know. The nice thing about bank reconciliation is you're going to know whether you got it right or wrong at the end, because those two balances are going to have to agree. So we'll get to that in a minute. All right, from here, the next thing you want to do in a bank reconciliation problem is put in your opening balances. And by opening balances, what I really mean is your ending balances. So since we're reconciling as October 31st, the bank statement showed that this particular company had an ending bank balance, according to the bank statement, of $10,410. So on the bank reconciliation form, we're going to go ahead and put that balance in as kind of our opening number here that we're going to need. It's really the ending balance. We're also going to need the balance per the books at the end. Now, you'll typically find that in many cases down in the additional information. If you read it, you'll notice that it says the balance on Cartwright's the company, on their books at the end of the month was $9,868. So we're going to go ahead and put that in as well in the books area. So you'll see here that's always going to be your starting points. All right. Now, it shouldn't surprise you that these two balances are different. That's exactly why we're doing a reconciliation. The reconciliation is going to attempt to explain the difference between the balance per the bank and the balance per the books, okay? Sometimes that difference, it might be due to errors or an error. It could just be legitimate things like outstanding items or a combination of both. All right, from here, it really kind of comes down to how you want to begin this. And putting a bank reconciliation together is a little bit like a puzzle. It doesn't matter really where you start, just kind of as long as you get to the end. And I always like to just kind of start with, the information you have per the books. We've got checks here. Let's go ahead and start with this first check here. We've got check number 563 for $48. Now, again, that balance is a check that we wrote. We recorded it in our books. We probably wrote the physical check, and like a lot of businesses do, sometimes they'll put that into the mail and mail it off to whoever they're paying the check to. And now it might take a couple of days to get there. Whoever gets or receives the check might take a couple of more days or maybe a week, who knows, to actually take that to the bank and cash it. All right, so what we need to ask ourselves is, not only do we have record of it, which of course we do here, that's on our books, our ledger, right? But does the bank also have record of it? In other words, did they clear or process the check? And if you notice here, you can see here they did, right? In the month of October, they cleared the check. So the first question is, did they process this check? The answer is yes. The second question is it for the same amount? Meaning the amount that we recorded on our books, does that match what actually cleared the bank? The answer is also yes. Since the answer is yes to both those questions, there's really no difference between the banks or the books. So the bank records and the book records are the same. So there's nothing to reconcile here. We're just going to make note of this. I always like to make note on problems like this if I can. I just put in a check mark next to these to say, okay, yeah, I've addressed that. Let's go to the next item now. Check number 564 for $720. Did that clear the bank? And was it for the same amount? Again, the answer is yes. Since there's no difference between the bank and the books, nothing to reconcile here. We can go ahead and just mark check marks next to those and move on. All right. How about the next check? The next check, 565 on our books, we show that we wrote that check for $450. Did that check clear the bank? The answer is yes. But the answer to the second question, did it clear for the same amount, is no. We show on our books that it cleared for $450, but the bank shows that check clearing for $405. So something went wrong here. Something resulted in an error. Now, there's really only two possibilities here, right? Either we made an error in how we recorded the checks in our books, or the bank made an error in processing it. So where you're going to find this answer in a problem like this typically is in the additional information. And if you read down below here, it says, check number 565 was correctly written and recorded by the bank for $405. However, it was recorded on Cartwright's books for $450. The check was to pay utilities expense. Okay, so what they're indicating here is that we made the error, right? We're Cartwright. The business made the error here. In other words, we correctly wrote the check for $405. We physically wrote the check for $405. But when we went to go record it in our books, it looks like we made a typo. Okay, it looks like to me, like we just reversed the 4 or the 0 and the 5, right? We transposed those numbers for a difference of $45. Or another way to say it is when we recorded it in our books, we took out $45 too much, didn't we? $45 too much. All right, so here's what you're going to do. These are probably the corrections of errors are probably the hardest ones in terms of reconciliation. So, but really, let me boil it down for you. When you find an error on a bank reconciliation, just ask yourself, again, two questions. The first, and you can write these questions down if it helps you, but the first question is, who made the error? Who made the error? You got to find that out. Who made the error? Well, in this case, the business made the error, right? Now, the reason why that question is important is because that's going to tell us which side on this reconciliation form we're going to reconcile this on. We're going to reconcile this on the book side. Why? Because the books are wrong. We made a mistake on our books, right? So they're wrong. The next question that you're going to ask is, what was the impact to cash on our books? Well, didn't we already determine that we took out $45 too much, didn't we? We took out $45 too much cash. So what we're going to do in our reconciliation form here is we're going to account for that by adding back that $45. So under the book side, we're going to add back $45 in our reconciliation. Now I got to put a label on this. I'm going to say something like correct error. You don't have to get too fancy with these labels, but you do have to have a label. And I'll say something like correct error, this was a check 565. And so on your reconciliation form, it's going to look a little bit like this, okay? Or something like that, all right? Now, just putting it on the reconciliation form doesn't actually fix my books, does it? I've actually now got to make a journal entry, now that I know of this error, right? I've got to actually make a journal entry in my actual books to fix this. Putting it on the form is not good enough. The entry, remember, was to utilities expense. That's what they told us in the additional information. So the entry is going to look like this. It's going to be to cash, which is a debit of 45, increase in cash, and we're going to credit utilities expense. The other result of this is we recorded too much utilities expense in our books. So by crediting utilities expense, we're going to reduce the expense amount there. So that's what that entry is going to look like. All right, so we have to do a journal entry as well as the actual entry on our form. All right, so that's going to take care of that when we put check marks. Let's go to the next check. We're just going to work our way down the list here. The next check is check number 566 for $85. Did that clear the bank? Well, if you look ahead, yes. Did it clear for the same amount? Yes. We like when that happens. Nice and easy. We can just check those off. No difference between the two. How about check number 567? 567 for $800. Did that check clear the bank? Well, the answer this time is no. It didn't clear the bank. Not at all, right? Does this mean that there was an error? Not necessarily. I mean, especially with things like checks. I mean, think about it again. The business probably wrote the check and then sent it off in the mail. Well, who knows how long that took? So it's possible that the bank statement cut off, right, in that kind of that lag time, that in-between time, between the time we wrote and sent the check off and the time that whoever was receiving the check actually took it to the bank and processed it. There's a name for these. We typically call these outstanding checks, or sometimes called checks in transit. But in terms of reconciliation, really all we have to do, again, is ask ourselves a couple of questions. First of all, well, really just one. Who's got record of this check and who doesn't? Okay, we already know the answer to this because on our books, we have record of it, right? We have record of it, the bank doesn't. And by answering that question, you now know where we need to reconcile this. Guess what? We need to reconcile this on the bank side because the bank doesn't have record of it. Now, of course, when the check does come through and eventually clear through the bank, what's it going to do? It's going to reduce your bank balance. So we're going to reconcile it on the less area of the bank side of the reconciliation. So I'm going to put a label here, something like outstanding check. Number 567. And then I'm going to put $800 here, and I'll put brackets around it just to indicate that or just to stress there that I'm going to reduce that balance when I go to record the final adjusted balance. Okay, now do I have to make a journal entry for that entry? Well, think about it. No, I mean, I've got my books correct, right? Didn't we determine that our books were correct? We recorded the check, at least as far as we know so far, correctly, right? The only thing that's happened is we just got this time lag for it to actually clear the bank. So no need to make an entry for an outstanding item like that. Okay, so I'll mark that one off. How about the next check, 568? Did that clear the bank? Yes. For the same amount? Yes. Nothing to see there. All we got to do is just put check marks there and we're done. How about check number 569 for what? 452. Did that clear the bank? No. Same thing here. It looks like we have an outstanding check, don't we? So who's got record of it? We do. The bank doesn't. So we're going to record it again in the less section on the bank side. And I'll just put it right under the other one here. 569, and that was for $452. Okay, great. And it'll look just like that. Okay, good. Now, looking at my list here, it looks like I've got check marks down across all of my ledger entries, at least for the check side, so that's good. But notice up on the bank statement, there's a couple of items here still that we need to address. One of them here says service charge DM. DM just stands for debit memo. And if we look down in our additional information, it says the debit memo, and don't worry about the term debit memo again, but it just says the debit memo was for bank service charges, meaning the bank took $15 out of our account. Cartwright records service charges in the miscellaneous expense account. Well, this time, ask yourself the same question. Who's got record of it and who doesn't? Well, this time the bank's got record of it. Doesn't look like we do, right? So we're just finding out about this now. So where are we going to adjust this? Well, since we don't have a record of it, we're going to adjust it on our side here, right? Under the less section. So I'm going to put here something like service charge. For what, $15? And I'm going to reduce that on the book side. Now, do I have to make a journal entry for that one? This time the answer is yes. The answer is yes, because the bank had record of it. We didn't. So putting it on the reconciliation form is not good enough. I also have to fix it actually in my books and record it. So what's that entry going to look like? Well, let's see here. Bring this one down here. So what are we going to have here? Well, it told us to put it to miscellaneous expense. And of course, we're going to have cash as well. So credit to cash, debit to miscellaneous expense because it was on the less side. So we got to do that. All right. And so we got that entry done. Okay. So that's that one. We'll cross that one off. The other entry on here, kind of a cryptic code again, also says NSFDM. And it looks like it was for 135. All right. Let's read the additional information about this. It says that a check previously deposited by Cartwright was returned for NSF. NSF means non-sufficient funds. $135. The check was from Steve Smith, one of our customers, in payment of his account. So let's think about what happened here. What it sounds like happened is Cartwright took a check that we received from a customer, payment of his account, to the bank. The bank, this is the way the bank normally does it. The bank normally probably would have just included in one of the deposits shown here. Because when they first take the check, the physical check from you, they don't know it's a bad check, do they? All right. So they first probably took it and deposited it in your account. Then they go to process the check, and maybe a day later or 2 days later, they discover that it's non-sufficient funds. In other words, there's not enough money in that person's bank account to cover the check. So the bank doesn't care. The only thing they're going to do is they're just going to kick it right back out of their account, your account. They're going to call it non-sufficient funds, and that looks exactly like what they did here, right? They just kicked it right out of our account, and they're saying, well, it's back to you to go and get it from your customer. They're not going to try and collect it from your customer. You're going to have to go back and get it. So they're just notifying you. Well, it looks like, again, we're just finding out about this now, right? So same question as always. Who's got record of this and who doesn't? Well, the bank got record of it. We're just finding out about it. So which side do we need to adjust this on? Well, how about the book side, right? And is it money that came out of our account? Yeah, it's money that came out of our account. So under the left side, we're going to put something like NSF check for what, $135. And we'll go ahead and put that under the less side of our books reconciliation. Now, again, do I have to make an entry for that? Well, again, the answer is yes, because it's on, basically that way this boils down to is any entries you're gonna put here down in the books area, you're gonna have to make a journal entry for if the problem asks for it, okay? Any reconciliations up here that you do, there's no need for a journal entry because you've got your records right. But the way this one's gonna look, you can see here the third entry down here, is you're going to see here, you're going to see a credit to cash because it was money that the bank took out of our account, right? They kicked it out. And a debit to accounts receivable. Now, if you really think this one through, why we're debiting or increasing accounts receivable is because the bank's saying, hey, we're kicking this money out. Now it's your turn to go back to your customer and try and collect it. Well, we're going to try and collect it, right? We're going to go back to our customer and say, hey, you wrote us a bad check. So we're going to put it into accounts receivable in the meantime, right? While we're going back and trying to get it from them. Okay, so that explains that entry. All right, good. Okay. All right, so now we've got check marks down this whole side column, this whole side column. So we got all these other items to deal with, but this is going to go pretty quick. Let's deal with the deposits. On October 15th, we show in our books that we deposited $4,000 to the bank. Same questions. Did that deposit clear or get processed through the bank? Yes. Did it clear for the same amount? Yeah. No difference between the book and the bank. So we go ahead and just put check marks by it. No need to reconcile it. How about the next one, October 22nd, deposit of $2,650. Did it clear the bank? The answer is yes. Same amount, yes. Same thing for the next one, $1,400. Did it clear the bank? Yes. Same amount, yes. Again, just put check marks by those because there's no need to have any sort of reconciliation because there's no difference between the book and the banks. But look at this last item. This last item, October 31st for $1,865. We show that we went to the bank and made a deposit for $1,865, didn't we? And it was right at the end of the month, wasn't it? Right at the end of the month. All right. So here's probably what happened here. If you notice on the bank, that didn't clear through, did it? It didn't get processed by the bank. So probably what happened is right at the end of the month, it was probably late in the day on October 31st, Cartwright went and deposited or made a deposit, and it was after the bank's cutoff. Now, usually that happens around 3 or 4 o'clock in the afternoon, give or take. But if it's after the cutoff, what's going to happen is the bank's going to take your deposit, but they're not going to record it to the next business day. Well, guess what? The next business day is November 1st, and that's going to be on the next bank statement. So this is a little bit like the opposite of an outstanding check. It's just not an error here. It's just a timing difference, meaning we've got record of it and the bank doesn't. And that's, again, the question you're going to ask. You know, who's got record of it, who doesn't? Well, we've got record of it, the bank doesn't. So guess which side we're going to reconcile this on? The bank side, right? We're going to reconcile this on the bank side. And we're going to add it to our bank balance because when that deposit eventually does get recorded through, what's it going to do? It's going to add to our bank balance. We're going to call this deposit in transit or outstanding deposit. That's kind of the terminology they use. And it's going to be for $1,865. It's not just like that, $1,865. Great. Okay, now do we have to do a journal entry for it? The answer is no, right? Because anything we put up here, we don't have to do journal entries for it. Because we've got record of it, the bank doesn't. Okay, so we're good. All right, so we can check that one off. There is only one other item on this reconciliation I haven't addressed. Notice it says ARCM. That stands for Accounts Receivable Credit Memo. You can see here for what? $1,260. Let's read the additional information. It says the credit memo is for collection of an accounts receivable balance from one of Cartwright's customers. All right, this one's a bit of an oddball. Basically, what they're kind of implying here is that one of our customers, it looks like, probably paid us kind of via direct wire to our account. You know, it's fine. They just, EFT or auto payment right to our account. And the assumption here, and this problem is that we're just finding about this now by looking at our bank statement. Now, most likely we probably would have caught this throughout the month, but let's say we didn't and we're catching it now. Well, same question as always. Who's got record of it? Who doesn't? Well, this time the bank's got record of it. We don't. So where are we going to adjust this? Again, we're going to adjust this on the book side, and it's going to be added under that section, right? So we're going to say something like AR collected. So it's going to increase our balance here down here, right? $1,260. So that entry right there under the ads section, AR collected. Now, do we have to make a journal entry for that? Yes, we do. The journal entry is going to be a debit to cash there, right? A debit to cash and a credit to accounts receivable because it was a payment of account, right? So cash is going up, we're recording that cash coming in, and we're reducing accounts receivable because it was a payment of their account. All right, that's really it. Now I've got check marks across all of our items. Now that's the only way that I kind of know that I might be done with this bank reconciliation. Now if I did everything right, if I did everything correct, my two adjusted balances should equal. So here's what I'm going to do next. I'm going to take over here on the bank side, I'm going to start with my 10,410. Yep, 10,410. I'm going to add this item, subtract these items, I'm going to get an adjusted balance per the bank. That adjusted balance per the bank, if you do the math, I already did it, is 11,023. Then I'm going to do the same thing down here on my books, okay? I'm going to start with my balance here to begin with, my adds, my subtracts there. I'm going to get an ending balance there. Now, what you're looking for is you're looking for those two balances to equal. Draw an arrow there. If those two balances equal, you have a valid bank reconciliation. That's all there is to it, all right? If they don't equal, you've got something wrong somewhere. You need to go back and figure it out, okay? That's it. My biggest advice to you on bank reconciliations, go slowly like always. But remember those questions. As you rewatch this video, you might want to write those questions down. I'll just review them really quickly. With the errors, who made the error? What was the impact to cash? Okay, that's when you come across an error. Most of the other times when you're doing all the other reconciling items, it's usually just who's got record of it and who doesn't, okay? Who's got record of it and who doesn't. As long as you if you ever get stuck, just ask yourself those questions and it should jog you where you need to put things, all right? Good luck with this chapter. And as always, you know where to find me if you have questions.